Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers, and welcome back to our next episode of the Contractors Profit Hacks Show. I'm Jeremy with Foundation Accounting and Consulting, and we are fighting back the ignorance on accounting by simplifying things and making it easier for you to understand. We've been talking a little bit about different numbers to track for your business, specifically 3 different ratios. We talked about your gross profit margin. We talked about the days in accounts receivable, and we talked about the days in accounts payable, right? Those are the 3 numbers that we want to track. Number 1, gross profit margin tells us if we're making money on jobs, okay? If that number is too low, we're not going to make it as a business. We got to have a higher gross profit margin. And what that number needs to be is dependent on your specific industry. Okay? And then we have days in accounts receivable and days in accounts payable. The idea here is to get days in accounts payable as low as possible, so we're getting paid sooner, and to get our days in accounts payable spread out more so that we are winning when it comes to our cash flow, right? The next number that we want to track is not a ratio. It is just one simple dollar amount, okay? And that simple dollar amount is net profit. Now, you'll see if you look at different companies that are putting together ratios, they will put a net profit percentage, right? Also called a net profit margin. The problem with a net profit margin is that net profit is not a percentage of revenue, okay? Let me give you an example to help you understand what I'm talking about here. When I was young, my neighbors got a trampoline, and we would frequent that trampoline. We all had to take a little paper back to our parents and have them sign that they aren't going to sue those people if I fall off and break my arm or leg or head or whatever, right? Now, of course, those are fantastic when it comes to standing up in court. But regardless of that point, that happened all the time. Well, I decided I was going to learn to do a flip on the trampoline, right? And so you guys probably know how this goes. You get on, you start jumping, and you try the first time, and you fall down into a heap on the tramp, and it's kind of ugly. It doesn't hurt quite as bad as trying to do it on the solid ground because it gives a little, but it's still not super pleasant, right? But it's not unpleasant enough that you aren't willing to try again. And so I'd get up again and start jumping and jumping and jumping and get as high as I possibly could because I thought you had to go high to be able to get a flip in, which isn't true. But anyway, I would get up as high as I possibly could and then try again, tuck my legs and roll backward and try and do that backflip. And it took several times. I had to keep trying and trying and trying and trying. But once I had gotten past that and I landed one, then it was, I landed one and then maybe 1 or 2 times I messed up. And then I landed one and then maybe only 1 time I messed up. And before too long, I was at a point where I could hit every flip that I tried every time, right? So this is kind of what net profit is like, right? We cannot say a percentage. The net profit is a percentage of revenue. If you remember back to our on the truck costs, right? We have our revenue, and our on the truck costs are a percentage of that revenue, right? So for example, we can know that for every dollar of revenue, 70 cents goes into the cost, the on the truck cost to do that job, right? Then we have 30 cents left over. That's our gross profit. And that's our gross profit margin as well. So we have 70 cents go to doing the work. 30 cents is left over. Do you remember what that 30 cents is for? What we use that for? Yeah, it goes toward the hill, right? Our selling, general, and admin expenses and some of the other payments on our balance sheet, right? That's where that 30 cents goes. And once we get over that hill, then we start to make profit at 30 cents per dollar of revenue, right? So this is kind of like me learning how to do a flip, right? Because while I am going over that hill and getting enough to cover the hill, I don't have any profit. My profit is zero because all 30 cents from every dollar is going toward getting over that hill. Once I get over the hill, now I'm making profit at 30 cents per dollar, right? So because of that, just like with learning to do a flip, at the start, it took me a long time to be able to land one. Once I finally landed one, and a second one, and a third one, then I got to a point where I could hit that flip every time without fail, right? And so as we're going over that hill, we are practicing and trying those flips, and we're not landing any yet, right? Once we get over that hill, then we get to a point where we're landing that flip every time, and we're successful, right? So because of that, our net profit is never a percentage of revenue. Because if it was a percentage of revenue and we doubled our revenue, that would mean that our net profit would double, right? But it doesn't. Our on the truck costs and our gross profit double if we double revenue, but our selling, general, and admin expenses stay about the same. The other payments on the balance sheet that we have to make with that 30 cents stay about the same, right? And we're going over that hill a little bit at a time. Once we get over that hill, now we're making profit at 30 cents per dollar of revenue, right? But not until we get over that hill. And so because of that, it is not truly a percentage of revenue, okay? So what we want to do is we want to track net profit dollars, just total net profit. That's what we want to compare as we are deciding how healthy our business is and where we're at. We want to track those net profit dollars, right? So there was something else that I was thinking I was going to say, but it's flown away thanks to my ADHD mind. So I will instead wrap up and let you know that we want to make sure to track the net profit dollars over different periods, right? so that we know how much money is left over after covering all of our on-the-truck costs and after getting over the hill. How much do we have left over? Okay. So thank you very much, and I will talk to you again soon. Thank you. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.